Welcome back to the Deep Dive, where we take today's financial news and break it down so you can make sense of it all.
It's always interesting to see how global events and market indicators intersect.
Well, one company that caught my eye is Flutter Entertainment. Their stock is up a whopping 8% today. They're the parent company of FanDuel, the sports betting giant, and it seems like they're betting big on their own future. In fact, they've announced a $5 billion share buyback. Can you unpack what this means for listeners who might not be familiar with this strategy?
Absolutely. A share buyback is essentially when a company uses its own profits to buy back its own shares from the market. This reduces the number of outstanding shares, which can increase the value of the remaining shares. It's often seen as a sign of confidence in the company's future performance.
So in FanDuel's case, this buyback seems to be driven by their very optimistic outlook on the North American market.
Right. They're projecting significant growth in the total addressable market for online sports betting, citing favorable regulations and a growing acceptance of online gambling. They're basically putting their money where their mouth is, signaling to investors that they're confident in their ability to capitalize on this expanding market.
That's a bold move, and it seems to be paying off so far, at least in terms of their stock price. But not every company in the hospitality sector is having such a good day. Target Hospitality is down a staggering 24%.
Yes, the news about Target Hospitality is definitely sobering. They were in talks for a potential buyout, but the deal fell through, and the market reacted swiftly. Their stock price took a significant hit, reflecting this lost opportunity.
It seems like investors are a bit skittish about the hospitality industry in general. We're seeing reports of record online holiday sales, suggesting that perhaps people are choosing to stay home rather than splurge on travel and accommodations.
That's an astute observation. There's a sense of uncertainty in the air, and investors are always looking for clues about where consumer spending is headed. Target Hospitality's situation, coupled with those online shopping trends, could be painting a slightly dimmer picture for the traditional hospitality sector in the near term.
It's fascinating how seemingly unrelated data points can converge to tell a bigger story. Speaking of stories, Tesla continues to be the talk of Wall Street. Analyst Bain Co at Baird is doubling down on his bullish Tesla predictions, forecasting even more gains for the electric car giant.
Bain Co has been a long-time Tesla bull, and his latest prediction is based on his belief that the company's upcoming delivery data will exceed expectations. He's particularly excited about the continued ramp-up of production at their Gigafactory in Texas, which could significantly boost their output.
It seems like Tesla is always a few steps ahead. But while they're busy electrifying the automotive world, the financial world is still grappling with the age-old dance of interest rates. The Fed recently announced a rate cut, and I'm curious to hear your take on what this means for everyday consumers like our listeners.
You're right, interest rate changes have a ripple effect across the economy. When the Federal Reserve cuts the federal funds rate, which is the interest rate that banks charge each other for short-term loans, it becomes cheaper for banks to borrow money.
And what does that mean for the average person who's not a banker?
It means that borrowing costs tend to go down across the board. We can see this reflected in the 175% surge in mortgage refinances that the briefing mentioned. Lower interest rates can make it more attractive for homeowners to refinance their mortgages, potentially saving them money on their monthly payments.
That's a great point. The briefing also highlighted the story of an immigrant family trying to decide whether now is a good time to buy a home in California's competitive housing market. It seems like lower interest rates could make buying more appealing, but then there's the issue of housing affordability in general.
Exactly. It's a classic dilemma. On the one hand, lower interest rates can make mortgages more affordable, which could entice more buyers to enter the market. On the other hand, California's housing market is known for its high prices and limited inventory. This family, like many others, has a complex decision to make, weighing the potential benefits of lower borrowing costs against the realities of a very expensive housing market.
It's a tough call, for sure. Speaking of tough calls, the briefing also touched on concerns about a potential chip shortage driven by the growing demand for AI. Should we be worried about our smartphones and laptops becoming luxury items?
It's definitely a trend worth monitoring. AI relies on incredibly powerful chips, and the current demand is putting a strain on global supply chains. This could lead to higher prices for electronics in the coming months.
So those new AI-powered features could come with a hefty price tag. That's something to keep in mind as we navigate the ever-evolving tech landscape. But before we get too caught up in the future, are there any other noteworthy events from today's briefing that our listeners should know about?
Well, there were a few other market movers. AT&T is trading near a 3-year high, which suggests renewed investor confidence in the telecom giant. On the other hand, Merck faced a setback with their colon cancer treatment trial, which sent their stock price lower.
It's a mixed bag out there, as always. Some companies are riding high, while others are facing challenges. It's all part of the ebb and flow of the market.
Absolutely. And speaking of navigating those ebbs and flows, the briefing also mentioned Nelson Peltz and his activist investor firm, Trian Partners, securing a board seat at Rentokil Initial, a British pest control and hygiene company.
Oh, right. What's the significance of that move?
Nelson Peltz is known for taking an active role in the companies he invests in. He often pushes for changes in strategy or management to unlock shareholder value.
So his presence on the board of Rentokil Initial suggests that he sees room for improvement. This could be the beginning of a very interesting chapter for the company.
Indeed. And while we're talking about global players, we can't forget about Reddit's announcement that they're expanding their platform to 35 new countries. It seems like they're determined to bring the world of online communities to every corner of the globe.
It seems like the internet is about to get a whole lot more. Interesting. But speaking of interesting, the bond market is reacting to the Fed's recent rate cut. The yield on the 10-year Treasury note is climbing, which some analysts see as a sign of investor anxiety about potential inflation.
Yeah, that's a really important point. The bond market, it can be a leading indicator of investor sentiment. So when investors are worried about inflation eating away at their returns, they often demand higher yields on bonds to kind of offset that risk.
Makes sense. So this uptick in Treasury yields, it suggests that some investors are a little uneasy about the potential for inflation to heat up after the Fed's rate cut.
Exactly. It's like they're trying to read the tea leaves and figure out what this means for the economy going forward.
It's a complicated puzzle, that's for sure. The Fed is trying to stimulate the economy without letting inflation run wild. It's a delicate balance.
It really is. And it's not just the Fed that's grappling with these challenges. Businesses and consumers are all trying to make sense of things too.
Which is why it's so helpful to have you here to guide us through these choppy waters. Speaking of navigating choppy waters, are there any other important takeaways from today's briefing that our listeners should keep in mind as they make their own financial decisions?
Well, even with all this market volatility, there are always opportunities for those who are paying attention. The briefing mentioned that some credit card companies are actually lowering their APRs because of the Fed's rate cut.
That's good to know, especially for anyone carrying a balance.
Right. So it could be a good time for people to look into things like balance transfers or cards with lower introductory rates.
Little moves can make a big difference over time. Well, I always say knowledge is power, and you've definitely given us a lot to think about today. As we wrap up our deep dive, is there one final piece of advice you'd give our listeners?
In the middle of all this financial news, it can be easy to get overwhelmed. But my advice is simple. Stay informed, be proactive, and don't be afraid to ask questions. The financial world can seem intimidating, but with a little effort, anyone can learn the ropes and make smart choices.
I love that. Couldn't have said it better myself. Thank you so much for joining us and sharing your expertise today. It's been a pleasure, as always.
The pleasure was all mine.
And to all our listeners out there, thanks for joining us on this deep dive. The more you know, the better prepared you'll be to handle whatever the financial world throws your way. Stay curious, stay informed, and we'll catch you on the next deep dive.